fellow investors, and welcome back to Borex Investing. So as most of you probably know by now, I've been a Palantir bull for a few years now. I've been writing about my enthusiasm for this firm since 2021 on my website. But even as a long-term bull, I'm not blind to the risks. Palantir's valuation has gotten pretty stretched, and I want to break that down today. So in this video, we'll cover the current valuation, the new Boeing partnership and why that matters, Bank of America's new price target, and finally, my outlook on Palantir from here. So let's jump in. So like I said, I've been investing in Palantir since 2021. When the stock dipped hard in 2022, I didn't panic. I just doubled down and built my position. And those buys during the lows have paid off in a huge way. Today, I currently hold 2,100 shares, and this is after recently trimming 900 shares when I had some covered calls assigned at $175. But even with that recent trim, Palantir still remains one of my largest holdings. That said, with the stock recently pushing into the 180s again, it's time to have a real talk about the valuation. Palantir currently trades at a PE ratio above 500. Yes, 500. And a price to sales multiple that still prices in years of hypergrowth. This means the market already expects near flawless execution. And while I think Palantir has the tech and the leadership to deliver, there's not much room for error at these levels. Even as a bull, I have to acknowledge that the stock could consolidate or even correct if earnings growth slows, or if the market rotates out of AI names. So while I am holding my 2,100 shares and staying long, I'm not aggressively adding at these prices. And believe me, I think Palantir will scale and will grow into their hefty valuation. A long-term target you see for the bulls here is often this $1 trillion valuation. But what does that mean, and is that realistic? To hit a $1 trillion market cap with today's share count, the stock would have to trade at around $440 a share. Now, can it get there, let's say, by 2030? Well, if we look at a steady 20% annual growth rate through 2030, the math works. It can get to that market cap with relative ease. And remember, for a company that has already exploded nearly 400% in the last year, sustaining that kind of momentum isn't just possible, it's within reach. Palantir has proven it can defy expectations, and if execution stays strong, this target is absolutely on the table. But that being said, I do think there's other opportunities in the market right now which will outperform Palantir in the near future. Now let's talk about one of the most exciting and controversial recent developments. So Palantir itself has often been seen as a controversial company because of its government and defense ties, and they just partnered with another very controversial name, Boeing, specifically their Defense, Space, and Security division. So this partnership brings together two companies that spark a lot of debate, but also two companies that have enormous influence in defense and aerospace. This deal will see Boeing use Palantir's Foundry platform to unify and integrate data across its defense and space operations. That means everything from military aircraft, helicopters, satellites, missiles, weapons production, all will be streamlined under Palantir's AI systems. And obviously the benefits here are massive. You're going to have the product acceleration, the workflow standardization, and there's going to be a national security impact, supporting highly sensitive defense missions with advanced AI tools. While the financial details weren't disclosed, analysts estimate that this could contribute hundreds of millions annually to Palantir's revenue. And remember, Boeing's defense segment alone is a $25 billion business. So this is more than just another contract. It's really a flagship partnership that strengthens Palantir's position as the go-to AI software provider for defense globally. And this should have a great impact on their bottom line when this eventually hits earnings. So also in the news, we have a new price target for Palantir from Bank of America. They recently raised their price target on Palantir from $180 to $215 while keeping a buy rating. Here's what they're citing: stronger than expected growth across Palantir's government and international defense business, the UK Ministry of Defence deal worth up to £750 million, NATO's adoption of Palantir's Maven system for battlefield intelligence, nearly 39% year-over-year revenue growth with gross margins close to 80%, and they forecast that government sales could exceed $8 billion by 2030 with a 30% compound annual growth rate between 2025 and 2030. Bank of America also highlighted Palantir's AI forward deployed engineers, basically elite teams embedding AI into client operations using AI. So Bank of America believes this gives Palantir a wide moat and makes it more likely customers will buy Palantir's full operating system rather than build their own. So I do have a bit of critique for the Bank of America report. While I agree with the growth story, they aren't mentioning the importance of having enterprise growth. While government contracts are nice, you will need the commercial sector to aggressively grow. If revenue growth slows even slightly or margins compress, that target will look aggressive. But again, I do think this shows that Wall Street is finally acknowledging the kind of upside that Palantir bulls have been talking about for years. So where do I stand? Well, I'm still a long-term bull. I continue to believe Palantir can hit $1 trillion market cap by 2030 if it maintains execution in government contracts, expands commercial adoption, and keeps innovating with AI agents. That said, I'm very cautious on valuation in the short term. I am not adding at these levels, and I wouldn't be surprised to see some consolidation. I don't know how much higher the stock price can go in the short term. The Boeing partnership proves Palantir is cementing itself as a critical defense AI provider, which is exactly the kind of deal that validates my $1 trillion thesis. And Bank of America's $215 price target highlights the growth expectations baked in. But remember, high expectations also mean high risk. So for me, Palantir is a company you either believe in long term or you don't. I do believe in their ontology, and I believe in their products and their management team. And that's why I'm still holding on to my shares. But what do you think? Do you agree with Bank of America's $215 target? Are you adding at these levels or waiting for a pullback? Drop your thoughts in the comments. And if you enjoyed this breakdown, please like and subscribe for more investing insights. I'll see you next time.